Hey, how's it going, everybody? All right, I finally got a chance to get caught up on all the S&P 500 earnings data. Been a busy week for me outside of the TSP and investing stuff. So apologies for getting this posted a day or two late. I wanted to get it done this weekend, but and I was prepared to present this yesterday, but had a bad internet connection where I was at, or cellular connection, I might say, for with my tablet here. So anyway, let's talk about yes and how what went on with the S&P 500 earnings with the top 100s, as well as the broader index stuff that will interest those of you guys in TSP particularly. Um, I'll break it down like normal. We'll start off with the summary info. Just the broader S&P 500 info for you guys' interest, and after that, if you invest outside of TSP and you want to know more or less what's going on with the top 100s that reported last week, basically the top 100 of the 500 stocks in the S&P 500. I'll be talking about those, and then I'll cover who will be reporting, which top 100 stocks will be reporting, or companies will be reporting this coming week. Also, I want to talk about a little bit about S&P 500 price itself, which is what the C fund follows, and I'm also going to talk about the 10-year Treasury note. Yeah, basically, which is what more or less what the G fund's growth rate follows, but there's more detail in there that I want to talk about that would be some, I think would be good insight for you guys to always get you wondering, like, why this, why that. This is science, and if you're not asking why things are happening, then you're not doing much for science. And a lot of you guys might not realize investing is a science, and it's just the study of it. Yeah, the study of the stock market, basically. So I want to get you guys going. Get that kind of mentality in your heads when you're investing: is why is this taking place, or why is that taking place, and what does it mean for me, or what does it mean for my investment if I have my money invested in this or that particular area? So, all right. So without rambling too much, I'm going to move on and start giving you some of the juicy info here. Okay. All right, we're going to start this off with the broader S&P 500 information for you guys, because most of you guys who only invest in TSP, this is all you're going to really care about, if at all. But this, I know this is going to be a little bit Greek to some of you guys, or a good number of you guys, but then I say just assume that you're going to be picking up nuggets of knowledge here and there. They're treated like a jigsaw puzzle. When you first have just a little bit, just a few pieces, and you start putting just a few pieces together, it's not going to make much sense. But you'll know that certain things go with certain things. And over time, you start getting more pieces put together or other sections put together, and then you start to develop a more comprehensive picture for you. Treat this information the same way anytime you're in the group. There's a lot to learn. We know there's a learning curve, and just be patient, pick up what you can, and then you're going to start having epiphanies that, where you realize, oh, that's what this means or that means, whatever. And you'll start putting things together, and it'll start making more sense over time. This is going to be a lifelong learning experience, too, by the way. So don't expect to learn any of this overnight. It's not going to happen. Okay, so let's start with the S&P 500 current value, as I call it, where I think the S&P 500 can possibly be valued without any forward earnings projections factored in. Right now, based on the current formula that I've been working with, it is up to 4,400 now after this last week's earnings updates. This last week was the busiest week of the quarter as far as how many companies were reporting earnings. And boy, a lot of there were some huge companies playing this last week. You'll be seeing that a little bit later here. All right, so that same current value was only at 41.95 last week, so it's jumped over 200 points in the last week. All right, again, that's using my current calculation method. I think at the end of the quarter, I'll probably switch the calculation method. Also, I got because of it seems that the market isn't generally following what my numbers are coming out to. So the way that I'm doing the calculations might need to be changed, but possibly back to something more similar to what I originally used to do with these numbers. But whatever the case is, I'm going to keep pressing on over as long as this quarter goes on with the current method, and then at the end of the quarter, when we have a new quarter to start with and reset back to zero, whatever, with where things have changed, and I might look at changing it then. Also, I still have to study to see what goes on anyway. Okay, so future value basically is what I think the current value is going to be a year from now based on the current analyst estimates for all of the companies in the index. As you see, that number, the 4,400 number, is expected to grow to 5,080 by this time next year. That same number was at 4,935 last week, so it's up about 150 points, roughly, since last week. And the 12-month price estimate is now up to 5,470. It's where I think the S&P 500 could possibly get to in terms of its price by this time next year. That's up 100 points from what I had last week. Ideal trading range, basically where I think it could be in the short term, could be anywhere between 45.75 and 47.40. Last week, the ideal range was 44.05 to 45.65. Again, this is based on what earnings data was actually available at that particular time. With the new week of updates, that's what changes all this. All right, so last week's updates, effect on the current value is just last week alone with 169 points versus only 90 expected. So basically all the companies that reported earnings this last week strongly outperformed what I was originally expecting them to do. So it's always a positive because share prices are fundamentally dependent upon what goes on with the earnings themselves. And if the earnings are outperforming the expectations, that's more justification for prices to go higher. All right, so S&P 500 earnings accounted for so far this quarter, as of Friday, would be 281 companies, or 55.6% of the index. So we're just past the halfway point now, and we do have well over 100 more coming. As you see, looking down a little bit further, 149 expected to report this coming week. So we're going to be up over 400 of the 500, or actually 505 stock symbols accounted for by next weekend. All right, so change the current value so far this quarter is plus 336 points. So basically the CV there, 4,400, up 336 points means that would have been about 40-60 level. I think it was really like 40-40 or somewhere in that ballpark when it really started. So it's gone up quite a bit over the last just over the last month. All right, so percentage of the companies that has so far reported, the 281 companies that have reported updates so far, 90% of them have reported positive performance over last year. That is astronomical. I've not seen a higher number since I've started recording this information. That is very, very strong. A lot of participation in the growth there. So what happened in the dot-com bubble of 2001, 2002, whatever, it was generally just a few specific companies holding up the rest of the index and the economy, and there was not much breadth. It basically is what the running theme, the narrative would be. As you see here, you can't be any further from the truth with that kind of a statement right now. 90% of the constituents reporting growth. That is huge. Okay, so wrapping this up for you guys who are just TSP only and don't really care about the individual company stocks that I'm going to talk about next. Or better yet, you know what? Let me do a couple more insights onto the broader group of you guys before I go into the individual stocks. First, though, let's look at the weekly earnings announcements expected over the next 4 weeks. This coming week, this week starting today, 2 August through Friday, expecting 149 companies to report with a net effect of plus 91 on current value. That's what I anticipate happening. Next week, 9 through 13 August, only going to have 18 companies reporting or tentatively scheduled, and then only a plus 8 effect on current value expected. 16 through 20 August, only 17 companies expected to report, and for a combined plus 8 effect on the CV. And round out August, 23 to 27 August, you got 14 companies expecting plus 2 effect. Not very much there. All right, so total expected change to the current value over the next 4 weeks is anticipated at plus 112. So in other words, current value is at 4,400 right now. Expect that to rise to over 4,500 by next month. So that's very nice. Those are very nice gains. But we'll see. I'll have some more. I will show you guys why I would be a little bit on the. I wouldn't expect. I don't think you need to be pragmatic or overly cautious, overly conservative with your investing. But at the same time, I'm going to say don't expect to keep seeing 20+% performance out of the stock funds. So we'll talk about that more in a second here. Okay, so let's go ahead and move on here. I'll give it an idea with I've just kind of a thrown together formula to kind of estimate where I think where you might end up really being with because where the index where the S&P 500 price actually is hovering and not wanting to go higher. It seems these seem like they should be reasonable numbers. As you see, I got a swing out target at a short term. The trading ranges, I might call it, 42.80 on the bottom end up to 44.35 for normal volatility period. And the current value I would have down at 41.55. And also, percent growth expected is, these numbers here are also what you really want to pay attention to. These numbers were up around 20% at the beginning of the quarter. As you see, it's slowing down. And right over here on this section here, where the 12-month figure goes up at a slower rate, that shows slowing growth. Doesn't mean that we're going to stall growth completely and then start going the wrong direction, but it does mean that expect growth to slow. And we're going to have we have a much stronger standard to compete against now over a year from now, basically. All right, that could still change from quarter to quarter, but right now it looks like at least 4 quarters out, it's going to be mostly pretty flat. All right, so let's show you now what's going on with the S&P 500 on the chart, and so you have a kind of a little bit of a concept for why I have that 44.35 tentatively in there. Okay, so right now this is what the S&P 500 looks like over the last year on a daily basis. Specifically, know what's on here. Let me make sure I have the right drawing tool set up. I think that's the one I want. Let's come zoom in on this one particular area. Okay, it might be a little bit too zoomed in. You can't really get so much of a context of where things are. Okay, so the index topped out at 44.29 just a couple days ago, just last week, July 29. That's the highest. That's a record high there. But at the moment, it looks like it might be flattening out there in that range. So that's what I'm for, at least for now. But I got to experiment. Like today was a down day, as you can see here, but only down 8 basis points today. Not very much. That looks like it's worse than it really is. And you can really find support here because the 10-day moving average, that red line there, it's basically look like it might have found support there. But until we see the prices climb higher, I'm going to stick with my numbers that I have on that other table. And we'll see how things go from there. Because it doesn't, we do see the prices going up. Now, let's see, the beginning of the quarter was right there. Closed at 43.19. Look right over here if you want to follow along. 43.19 level, 43.19.94 more specifically. And as you see, the crosshairs will show you where where the price has been relative to that for the rest of the time. You see, most of the time it's been above that point. It's actually been hitting new highs. Even from there, it's still okay. That's a pivot. It looks like where these price peaks are at right here. They're becoming the bottom here. So that's another sign of possible price support, which means that the price could go up some more. I'm not going to go too deep into the technical analysis aspects here. If you want to get more into that, go to our swing traders group. We do have members there who get more deeply into that area. I'm just kind of glossing over and give you some basics right here. This is what I call a price pivot, though. As you see here, the top there was 43.92, 43.93, and now we're getting the low of 43.89 and 43.84. So it's a little bit lower, but right in that same range. So this is the reason I think there could be a possible price support right here between the pivot point and as well as the 10-day moving average being hit there as well. Again, that's just the technical aspects. At least on the earnings part, I expect to see more growth over the next year. You don't need to be worried about that. Okay, I know there has been a couple of concerns or questions from members wanting to know about how the COVID-19 pandemic, latest updates with it, is going to affect the economy and stock prices. Also, the eviction moratorium expiring. People have concerns about that as well, how that will affect things. Personally, it's just my own opinion. I don't really see either of those having that great an impact. I do have some concerns about the eviction moratorium, if I must be completely honest. But I do see enough information in some of the economic reports, like the ISM manufacturing report that just came out this morning. There was evidence there that some of the problems with production right now are people not going to work when the jobs are there, it seems, but people just aren't going to work. So maybe the eviction moratorium might compel people or might motivate people to actually get up and go back to work and start helping the production with these different companies. Also, it's another company mentioned that the transportation sector is the big bottleneck right now with their own production. Not enough trucks available or drivers available to move their freight. Seems to be what's slowing them down. Lead times are up there. But on a positive note, though, the price growth as a whole, basically the inflation indicator there from it, doesn't really tell how strong the inflation is, but how broad it is. And it is slowing down a little bit. It's still very strongly positive, but at least it was down this month from last month, and that's should be a good sign there. It's we don't want too much inflation. So anyway, yeah, eviction moratorium, I won't worry too much about it. In fact, I did see something this evening about President Biden wanting states, I think it was, to provide more assistance to people who are facing evictions. And I do have a quagmire there, I believe, where you help one person and then you screw someone else over. So you help the worker bees, but then the people who own the rental property, they're out a whole bunch of money because they're not getting their rental income. So, I mean, where do you draw the line between helping one side out too much and not helping the other side out enough? Maybe doing the evictions is not necessarily the answer at this point in time, but there needs to be some kind of more of a motivator to get people to go back to work. I know a lot of people might not be wanting to go back to work because they're still concerned about getting infected with COVID-19, or some of them might be too interested in the handouts that that the stimulus has provided them. Use your whatever narrative you want. That's just I'm just kind of reporting. That's kind of what the general idea that people have is that, at least from my observation or impression. Um, so I don't really see that being a real concern overall for the broader economy, or what to expect from share prices. All right, so I hope that might help you guys, some of you guys out a little bit here. All right, I also want to talk about for the broader population of the members here, the 10-year Treasury note yield. You can follow that using the ticker TNX, or Tango November X-ray. Just want to give you an idea of what's been going on there. Generally, just remember that bond prices tend to go in the opposite direction of bond yields, and stock prices usually go in the same direction. It's not always the case, but pretty commonly it is. So this does bring up some questions, because if I were to compare this against S&P 500, you're going to see something completely different. Just to kind of give you a little bit of a history on what the 10-year Treasury notes done over the last few months, though. As you see here, it did spike up until it peaked here the end of March. More particularly, you want to see it got up to about a 1.765 neighborhood. You see it at 17.65 right here, but just remember that this number is usually right about 10 times what the actual Treasury note yield is. So, I mean, no matter what, so like right now, it's looks like 1174, or yeah, 1174. You see it right here as well, which means that the Treasury note yield is basically at 1.17% overall. That's getting pretty low. The last price that was on the Treasury website was yesterday's, basically, which was 12.39, or 1.23%. So from the peak at the end of March to yesterday, or not yesterday, but Friday, the 10-year Treasury notes yield has dropped a good half a percent, or 50 basis points. It's a pretty good chunk, and that is tightening up the yield curve. I'm not going to go into detail on the yield curve right now, but at the end of the quarter, when I do my more in-depth presentation there, I will cover that then. But generally, though, if you see bond yields going down, that means people are buying into bonds, buying bonds, causing the price to go up. If they're buying into bonds, then you have to ask yourself wonder the question: where's the money coming from? Is it coming in from foreign entities, like foreign governments or foreign investors who don't necessarily have access to the U.S. stock market, or how much of it is also coming from U.S.-based investors, particularly those who are moving their money from stocks to bonds? And if that be the case, then wonder why that is happening. We don't really have that answer, but that is one of those. This elicits further research, if possible, on what is driving people, or whoever it is, to be buying up bonds right now and pushing their yields down. Now, there is a trade-off here, though. As the bond yield keeps coming down, the less attractive bonds are going to become, and the more attractive stocks are going to become, if given the same earnings yield for the stocks. Okay, so I think that'll mostly cover the information that I want to cover for the broader TSP group population. Now let's go more into the individual stock stuff for those of you guys who invest outside of TSP. Just to give you kind of a summary rundown, all right? I'm not going to go too deep. Just if you saw last week's presentation, you'll have kind of an idea there. Okay, now we're going to go from largest to smallest. This was a very busy week, as I mentioned, so I will probably condense this, go really short and to the point. You guys can always pause the video here, whatever, to get a better look at this information. But more or less, and these are just basically what I would call screens. Just gives you a basic rundown on who the top 100 companies were that reported last week and what their earnings trajectory over the next year, what impression they give me about whether I'd want to be buying into them or holding them or selling them. Okay, so a reminder: if you see it's a 5, that means it's likely to be a strong buy. A 4 means it's a buy still. A 3 means it's a hold. 2 means it's a sell, and then a 1 would be a strong sell. Kind of give you an idea there. Okay, so starting off with Apple, that's the largest company in the entire index. They have a $2.411 trillion market cap as of Friday, or about that. They doubled their earnings. They reported literally double what they reported last quarter, or same quarter last year. I mean, not last quarter. Looking at their trajectory too, got 511 in trailing 12-month earnings last. So far with the most recent update factored in, and projecting that out the next 4 quarters, it's going to be up most strongly next quarter to 560, and then it'll slow down to 580. And then it'll go back in the opposite direction, it looks like, over the 3rd and 4th quarters. For that reason, at least as far as a short-term investment is concerned, that makes me not so keen on wanting to buy Apple stock. Yeah, it's a good long-term buy, long-term hold, whatever. But if you're looking for a shorter-term investment, something that'll just get you performance over the next year, I'd probably look elsewhere. But 3.5 does mean I would hold and lean toward buying, if anything, because but the negative trend there between the 2nd quarter ahead and up to the 4th quarter ahead going downward, got to keep an eye on that, because that's usually where I would usually expect share prices to also start going down as well. So that could possibly be a headwind against the S&P 500's broader price performance. All right, so now you have kind of an idea how I'm going about this information here. I'm going to go a lot more quickly through this because we have way too many slides to look at here for the top 100s reported last week. And I'm running short on hard drive space at the moment, so let's go quickly. Okay, Microsoft, 2nd largest in the index, $2.145 trillion market cap. I also have them as a 3.5 or a hold a slight buy. Alphabet, which is GOOG or GOOGL, either one of those stock symbols you can buy shares of or trade, whatever. I'm not liking their outlook so much. They're going up the next 2 quarters, but they're going back down the quarters after that, and 4 quarters ahead is below what the current trailing 12 is at, or at least that's what projection is. So I would maybe lean towards selling them, if anything, but they could be also a hold, basically, is what that means, 2.5. All right, moving on to Amazon. Usually I like Amazon quite a bit. I think they're a great long-term hold. However, trailing 12-month earnings is higher than everything else. Also, though, I might want to give you the caveat that a lot of times these forward projections don't necessarily have the updated guidance factored in. Like sometimes the analysts might change their or revise their estimates upward based on guidance given by the company or other factors, and especially when the company might have smashed on earnings like Amazon did. They were $5 a share higher than just this quarter alone than what they were last quarter. So that alone could possibly account for why this looks this way. So again, these are just screens. Doesn't mean if you see that a company here is a strong buy, it doesn't necessarily mean that they really are a good strong buy for your strategy. And likewise, if you see something that looks like a strong sell, then it might not necessarily be a really good strong sell for a different type of strategy. All right, so keep all that in mind. It's just kind of the impression that the earnings trends that I have right now, the data I currently have available to me now, is suggesting. All right, Facebook, that's going to be a 3.5. That's a hold to slight buy. Tesla, I know a lot of you guys are not fans of Tesla, but their earnings data looks really good. Their trajectory looks strongly positive. That's going to be a 5. That's a strong buy. All right, same goes with Visa and MasterCard. They're both projecting stronger, basically double-digit percentage earnings growth over the next year. And so I like all three of those for sure. All right, Procter & Gamble, it's 3.5. That's a hold to buy. PayPal I have as a strong buy, impression 5 there, as you see again. Comcast cable, that's also a strong buy. ExxonMobil, I like the energy sector as a whole, and ExxonMobil is definitely a participant in that. As you say, they reported negative 70 cents per share in earnings last year. The same quarter last year, and this most recent week, they reported $1.10 positive. That's a very good number to see there, and it's looking only more strongly upward there. Okay, Pfizer. I call them a buy, not a strong buy, but a buy. It's basically I'm expecting growth out of them, but maybe not strong enough earnings performance to really justify much share price performance. But I will say also, since I'm on this topic here, remember if you buy dividend stocks, you might not be so concerned with share price performance. You might be more interested in the dividend performance itself. You want to see the company consistently paying dividends, or maybe even increasing their dividend amounts. So again, there are different types of investment strategies you can follow. So you might want to keep that in mind, whether you're working with whether you want to have a growth portfolio or a value portfolio is the easy way to summarize that. Growth would be more like you're relying mostly on share price performance. And if that be the case, it'd be a good idea to pay a lot more attention to their earnings trajectory here. And if you like value or dividends, basically, then you might want to just see at least steady earnings and price performance, and just rely on those dividends getting dripped back into more shares of that same company. All right, so moving on now, let's go on to the next one. We got Thermo Fisher Science. My impression of them is a 1, because they are trending downward consistently over the next 4 quarters. That's a strong sell. If you have any shares of them, this at least gives the implication that you might want to get rid of them. All right, AbbVie, that's a strong buy according to for what these numbers show. It's trending upward, and it's double-digit percentage if I were to put the percentages in there. For simplicity, I did not put percentages in there, but basically that has a direct impact on whether I rate something a 5 or 4 or 3.5 sometimes. All right, Chevron is next. That's a strong buy as well. Merck and McDonald's also strong buys. T-Mobile is a sell. Qualcomm is a strong buy. United Parcel Service, that is a hold to buy. Charter Communications, strong buy. Lind, that one is kind of I put them as a buy to a strong buy, kind of in that gray area. Not quite convinced that I would call them a buy, but not enough convinced that I would make them a strong buy either. So that's why I call them a 4.5. All right, and Bristol Myers Squibb, oh my God, for Kramer's favorite stock. But you know what? I'm going to have to agree with him on this one. The earnings data here suggests that Bristol Myers is a strong buy right now. So I can't imagine. I don't watch it so much ever anymore, but I just don't have time to. But I can imagine how much more he's talking about them right now than he already was. All right, Starbucks, that is a 4.5, or basically somewhere between a buy and a strong buy. Boeing, they look really good there. They were very strongly in the hole, negative $4.79 per share, earnings per share the same quarter last year. They reported positive 40 cents. They went cash positive again this last quarter. That's great to see. All right, trailing 12-month earnings. By the way, I did forget to mention that the smaller, or basically the lower the trailing 12-month earnings are on these companies, the lower you should expect their share price to be as well. Doesn't mean that they're going to be a better buy than someone with a company with a higher share price, but if that's the way you want to invest, where you're focused more on buying lower share price stocks, you might want to focus your attention on the ones with a lower trailing 12-month earnings. I didn't put prices in here because I'm not too concerned about that. I'm more concerned about the earnings trajectory because that'll give you an idea of what to expect from their price performance. 10% price performance is 10% price performance. It doesn't matter if it's a $100 stock going up to $110, or if it's a $10 stock going up to $10.10, or no, to $11. It's the same 10% growth, and it's the same 10% performance on what money you have invested. All right, but moving on here, Raytheon, that's another strong buy. AMD, it is a buy. ServiceNow, that I have as a strong buy. 3M, I have them as a sell. General Electric, I just got some word today that they just did a 1-to-8 reverse stock split today, or announced one. Now don't buy or sell stocks just because they're doing a split. But regardless of what's going on there, the earnings are suggesting strong buy. Caterpillar, that's also a strong buy. Caterpillar, a lot of their earnings is also dependent upon what goes on with China. From what I remember a while back. So that's also a positive there. And then what China does, a lot of times there's an impression that the rest of the world's economies tend to do as well. So that can always be a little telltale indicator there. All right, S&P Global, same company that introduced the S&P, basically maintains the S&P 500. They are a buy. Lockheed Martin, military aircraft and weapons company, they are a buy. Stryker, they're also a buy. Lam Research, I have them as a strong buy. Automatic data processing, they're somewhere in between a buy and a strong buy. Altria Group is a buy. Mondelez is a buy to a strong buy. Gilead Sciences, I have as a strong sell. Not very many companies right now that I have as a sell at all. Okay, now breaking those all down into where they all stand. As you see, there are a lot of strong buys in that group there. Tesla, Visa, MasterCard, PayPal, Comcast, ExxonMobil, AbbVie, Chevron, Merck, McDonald's, Qualcomm, Charter, Bristol Myers, Boeing, Raytheon, ServiceNow, General Electric, Caterpillar, and Lam Research. Those are all the strong buys. All right, and then 4.5, those were Lynn, Starbucks, Automatic Data Processing, and Mondelez. And as you see, it kind of tapers down a little bit more. It's kind of weird seeing Google down there in the hold to sell area, if I have to be honest. Very strange to see them. And also Apple and Microsoft, Facebook, basically all the FANG stocks down there in basically hold neighborhood, and all these other stocks look like they might be good to outperform those major stocks there. So something to keep in mind there. All right, so what's going on this week? We did not have any top 100 scheduled to report today. Things could always change. I didn't take a close look, but out of the companies that were reporting today, I wasn't expecting any of them to be the top 100 S&P 500 companies. Tomorrow we got three top 100s reporting. Got Eli Lilly, Amgen, and Fidelity National Info Services. And then Wednesday, we got CVS Health and Booking Holdings. Thursday, we'll have Moderna and Zoetis. And it'll round off the week on Friday. I'm not so convinced that'll actually be Friday, though. Berkshire Hathaway usually reports their earnings on Saturdays. They're the only company in the index that tends to report their earnings on a weekend. And I think that has a lot to do with Warren Buffett, I believe, might think that their earnings announcements tend to interfere with the rest of their business. I know he's been an advocate in the past for doing earnings updates at less frequent intervals. I think twice a year or 3 times a year or something like that, instead of the 4 times a year that they're required to do now. So I don't know if that's the rhyme or reason to why Berkshire Hathaway usually reports on Saturdays, but as of right now, according to my info, they're tentatively scheduled for Friday, but I I do expect that to get pushed to Saturday. Or at least I wouldn't be surprised if they report Saturday like normal. Okay, well, I'm going to go ahead and wrap this one up. It's was not expecting this to go as long as it did either. So I apologize on that, but a lot of good information. I hope that's useful for some of you guys. So, or it might help you make a little bit more well-informed decisions on your investments, whether it be within TSP or outside TSP. All right? That's all I have. I'll have another busy week this week to report for you guys next week, right? It's getting all tongue-tied there a little bit. But, all right, so next week, just be warned, might be a little bit on the long side as well. And then after that, might be able to do these a little bit more quickly, okay? So that's all I have. Thank you guys for taking the time to watch this, and we'll see you guys next week. Thanks.